What is up, guys? Welcome back to the channel. This is Trading with Emotions. I want to talk about this scenario here. I'm not going to call it a squeeze scenario just because it's just a price target that I'm looking for here in the coming days. Before we do start, I do want to show you why this works. Okay, so I'm going to give you an example. All right, so pretend you're back here in January, okay, and we have this entire setup here before we had the run, right? We had the little projector pattern that took us all the way up to 77. You guys remember that, right? Okay, well, now pretend that we're splitting these sections up into individual phases. So we have this setup back here, right? And if we shift this over, okay, we're going to shift it right over here to the current setup. Pretend that you have $1 million, right? And you are given this money to be invested, but you do have a time frame in which you have to invest this money. All right, it's a job, right? These guys give you the $1 million, and you are trying to basically cheat the system. You have to do it in some way that's going to favor you, right, or help you. They tell you their strategy. In this case, the strategy is found from February 1st all the way to June 1st, right? So it's this entire setup right here. And then you have to use this and apply it to the current state, right? So your job started on the 1st of December, okay? That's when it started. And you immediately saw this entire chart and said, okay, well, now I'm going to try and figure out what patterns I can make with these individual phases, right? Because this is your cap right here. You have your green candles are obviously where you start to cover some shares. Your red patterns are where you're shorting the stock, right? One thing to note is that you do have leverage, okay? So you have complete leverage to your position and what you can do with the stock. So you immediately short the stock, just like we did back here. And you start to construct the way these patterns look. Here we have a triple bottom setup currently. And you made this pattern, right? You made this pattern with the patterns that we had back here. We're using up all these patterns, okay? And this is what's making up the $1 million that you have in hand. So with this money, however, you start to run out of things to do, because if these patterns have to be fit in some sort of way every 4 months, you have to see where it is that you're going to be releasing all of these shares that you had shorted, right? You can really make things however you want with this setup, right? Because all it is volume, but it's volume displayed on certain dates. They can use the benefit of the option chain to make these decisions. So once you have this setup ready to go, okay, you decide that you want to release your shares at the end of the month as well, because you figured that it's the best way to distribute all of the cash that you have, setting up the patterns very specific to when they occur, okay? So you know that you shorted the stock on the 1st of December and that you will have to cover by April 1st, because that's 4 months. That's the time frame you're given. So how are you going to drop the stock as much as you can and accumulate as many shares as you can before you ramp up the price? How are you going to do that on a technical level? And you figured that the best way to do that was to make a triple bottom setup. That typically means a cup and handle is also at play. And you will accumulate all these shares, go along on the stock, and then bring it up to a favorable price, okay? I'm making the comparison that this phase back here was shorted. It lasted 120 days, so 4 months, and they brought the price up. And in between, you saw a lot of covering, but you also saw the creation of this pattern, which was a flag or a pennant. The same thing is happening down here. They're shorting the stock on December 1st, and they're making a wedge, and now it seems like they're making a cup and handle because, well, they're running out of time. So what can you do towards the end of this phase? Well, you gotta do something, right? How are you going to release these shares to the market? A good comparison here is looking at the actual ratio of these two and comparing that together. So if we set up these patterns, we can see that they look very similar on certain phases. Even though they're not located at the same time, we see them being replicated in their unique form, okay? And that's what's important here, man. It's like almost crossing off these patterns that are reoccurring in their own way. And then where are you going to put this big green candle? Where are you going to release those shares? You have to release them in 4 months, right? So where are you going to do it? And the best fit here in this scenario would be towards the end of the month. Now, not only does this indicate upside, okay, and it's a theory obviously, but I think it's a pretty good one. But the cycle happens to align with this current projector pattern that we have here built for next week going into the last week of March, which would probably bring us up to the $28 level, okay? So it's a scenario, okay? I don't put too much faith in something like this. I don't want anybody getting, beat up into this whole thing and then you lose your money. Have very little faith in this, but if you start seeing a correlation, and you do whatever it is that you want, right? Okay, this is not financial advice at the end of the day. We are just trying to figure out what is happening, okay, behind the price action. So this is what I got for you guys today, man. Let me know if you enjoyed the video, okay? And comment if you have any concerns, any questions, all of that stuff. All right, I'll see you guys later on stream. Bye-bye. Love you.